If you don't know your income statement, your cash flow statement, your balance sheet, and how the three connect, you're cooked. We're going to walk through how the three of these statements connect to each other, and you need to know this for any finance or investment banking interview. Whenever you have a three statement question, you want to remember that the income statement comes first, followed by your cash flow statement, then your balance sheet. With the income statement, you want to remember that your net income, your bottom line, pulls right into your retained earnings, which is in your stockholders' equity account of your balance sheet. You also want to remember that stuff like your amortization and depreciation are going to come from your intangible assets and your fixed assets, and also that obviously interest expense is going to come from your debt. That bottom line, your net income always goes to the top of your cash flow statement. And you have your cash flows for operations, your cash flows for investing, your cash flows for financing. In cash flows for operation, you always add back non-cash expenses, usually your depreciation, amortization. Where do you get those from? Your income statement. And you know that because your income statement has EBITDA, which is earnings before taxes, interest, depreciation, and amortization. So it has to be on there. You're also going to adjust for your changes in net operating working capital. That also comes from your balance sheet, which is usually your current assets and your liabilities. Cash flows for investing, your capital expenditures are going to come from your change in net fixed assets and your PP&E. And then when you go to the cash flow for financing section, any debt or equity issuances come from your balance sheet, and any stock buybacks or treasury stock is going to come from your treasury stock. Off the bat, the bottom line of your cash flow statement flows right into your cash account. You also want to remember that any depreciation expense is now going to take away from our plant, property, and equipment, usually the plant or equipment. And then from there, you also want to remember, like I said before, that your net income is going to flow into your retained earnings. If you have any questions about the technicals or you just want to know more, feel free to throw a comment over here or check out the link in my bio.